and gentlemen, you're watching Startup Central right here on ET Now with me, Sumita Karir. Over the next 30 minutes, we'll be getting you exclusive interviews with two companies. In fact, let's start with the first one. Then on that note, from a bedroom roastery to India's largest specialty coffee chain, Blue Tokai is now brewing up its biggest global expansion yet. After selling out in Dubai within a week and clocking more than twice its expected orders in the first 10 days in UAE, the company is now doubling down on the GCC market. But what will fuel the next phase of growth for the coffee major? I caught up with the co-founder and COO of the company to talk about that and more. Take a look at this exclusive interview that I had with the company.
So it's all started like everyone has this aspiration of, like taking your brand global. The quality of coffee which India grows can sit at par with any origins across the globe. So that confidence was there and coffee is a global product. It's not localized to India, and so that confidence was there that someday this Indian coffee, which is slightly rare occurrences in to find out in outside India country, we can be that source. With that aspiration, like GCC, we thought, okay, fine, it's easy to execute. It's a great coffee market in terms of numbers. There's a significant portion of Indian consumer base who are somehow, let's say, majority of them are somehow exposed to the brand. So there were different positives about right from the execution to brand awareness to product market fit. We thought, let's do this experiment and see like how it goes. So we picked up again, like since we are execution heavy even in India, we thought like let's have some partnership locally there. So we tied up with Pulsar Capital to help us out in GCC area, and we just opened like first cafe last week.
Okay.
With a unexpected response. I would say all my estimates of projections was wrong. We are doing.
What were your projections and what have you achieved?
We are doing almost. Just to give you an idea, we were sold out. I would have never imagined that. It has never happened in India. So we're doing at least for the first 10 days, at least more than 2x what I would have assumed. So that's a good positive sign. There are a couple of more cafes which are under fit out in Dubai. I think by end of March, we should be able to have at least 5 to 6 cafes.
But you're looking at further markets when it comes to your GCC expansion, not restricting yourself to...
I think UAE can easily accommodate more than 70, 80 Blue Tokai.
Okay.
So we never widespread ourselves. We have always played the concentrated game. So even in GCC also we picked up a country. Now we are going to penetrate further, go deep into a category rather than in a country, rather than just spraying things all over place just for the sake of having number of cities. So the offering is very
concentrated. It's very differentiated. You don't want to blindly just scale up, but you want to remain a differentiated offering, and you will remain focused. Is something, Shivam, that you're essentially talking about. But when you talk about the GCC expansion, I have to mention it that this, of course, falls pretty much in line with what the government of India is also thinking, but because they want Indian startups to go global, because we have global companies coming here, and now they want Indian companies to go global. And I think you also have presence in Japan. How's that working out? What are your expansion plans in that market, and how is that different from the GCC market?
Japan is slightly complicated as compared to GCC in terms of the language barrier, the execution, the culture. But again, Japan is also very heavy on coffee consumption, fastest growing coffee market, I would say. So we started our roastery, we started FMCG, we have a cafe in Tokyo. The plan is it will be slightly slower than the GCC because of all other factors which I mentioned you. But yeah, still in the game plan. But majority of the focus is going to be in GCC because
of a
I would say
huge
because of the
Indian
execution and
Okay. Okay. So since we're talking about expansion, you've also mentioned very recently that you're planning on expanding your number of cafes to 800 by 2030. Is that right?
4 years, 2031 March.
Okay.
We should be not 800, maybe 850.
Okay.
But yeah, the target is to have at
And
least.
where are you right now when it comes to
So right now we have 280. We will close the year March by at least 350, at least. And then from there on, like opening 120, 125 for next 4 years should lead us to 800 types, 800, 850
And that's where all the capital is going to go. You're in talks to raise capital. How much are you looking at?
We are cash flow positive, making EBITDA positive from last so many months. So yes, there is nothing called growth capital. It's all going to be the capex requirement to grow the business.
Which is how much? About 100?
100 million. Yeah, but it's also like a few of the early investors might take an exit. So, but primary requirement for the company is not that high.
Okay. And what is the valuation then you're looking for the company?
I think it doesn't matter to us. Right now, yes, we have started talking to people. There is decent interest, I would say, from the investor side. But our key parameter or the only topmost metrics for taking this decision is whom we can work with. So it's not the valuation. That's not the only metrics which we are trying to optimize. So it's more of whom we can work with, who can be aligned with the brand vision, who can be there for good or bad days. So that is what we are exploring.
Right. So what is your brand vision? Because, Shivam, we've seen in this very market, there are a bunch of D2C companies, also specialty coffee companies. You do have companies from abroad that are making their entry into one of the largest domestic markets, which is India. So how are you looking at sort of offering a very, very differentiated brand experience?
So I would say first of all, we are Indian brand. Okay, so the entire look and feel, theme or ethos of the brand is very Indian, and we are very proud about that. To give farmers the platform to showcase their product is what Blue Tokai is all about, right? So you can link that to traceability, transparency, and the type of coffee. We are into specialty coffee offering. Most of the brands are into commodity, I would say. So their thought process, their vision of how India will consume coffee is slightly different than what we think. So we are more focused on the quality of the product, the entire Indianness of the brand. The vision is no matter where you are and however you want to consume your coffee, if you're thinking of having a good cup of coffee, Blue Tokai should be the brand. So that's why we have this entire omni-channel approach, the mix of FMCG, the mix of convenience-driven product. So this is what we are trying to build, and to maybe down the line to be India's largest coffee company, which all Indians are proud of, and taking this Indian coffee offering to the global platform, which again all of us should be proud of. So this is what we are living with.
And how are your financials looking like? Are you profitable? Store level profitability versus company profitability? Give us a sense of that.
We have never run any business in losses. So all the contribution margins of all the channels had always been positive from day one. Okay. So we are making money. It's just the corporate overhead and the other expenses in the company was leading it to, because there's a certain threshold, right? The contribution margin has to match to the corporate overhead, and we have set up the team or the systems or the manufacturing facility to scale ourselves to 800,000 cafes, which is non-optimized as of now. But yes, from last, I would say 2-3 quarters, we had been making money, even on the corporate level, not just on the business level, channel level, sorry. So, and the scale is, we are most likely going to be 800 crore ARR in August.
Okay.
And making decent positive EBITDA.
Right, so 800 crores worth of ARR, that looks good. What's next for the company? Are you looking at IPOing? Because, there's a lot of retail investor interest in, the markets today. And of course, every founder is essentially, at least most of the founders are looking at getting listed and sort of banking and capitalizing on this opportunity. Would you also be looking at, will Blue Tokai essentially be looking at that?
It also depends on the market size, right? Like आज के टाइम में 5-6 हजार करोड़ का IPO, I doubt, like in consumer, it might work for a longer period. So the threshold is right now 8,000, 10,000 crore types. ठीक है? You never know, 3 साल बाद वो 15,000 crore हो जाए. The way India is growing. So I just don't want to limit myself कि 2030 में करना है, 2031 में करना है. I'm saying yes, IPO. Ideally, we should be doing it. There will be some time in future, but it all depends on the confidence of unit economics and the EBITDA, the confidence of how the market is going to accept us. So that bracket is tough to estimate right now, but if I have to give you a number, let's say maybe 4 years from now.
Well, that's Blue Tokai speaking to me exclusively a couple of days back. But let's now put the spotlight on India's startup ecosystem. Well, India's startup ecosystem is entering a fascinating new chapter. Over the last 5 years, India's tech ecosystem has moved through 3 distinct phases: a funding peak, a sharp correction, and now a more selective recovery. Now, as per Tracxn, total funding reached $38.3 billion in 2021. It dropped to $10.8 billion in 2023 and has since stabilized at around $12 billion annually. And at the same time, the number of funding rounds have steadily declined, indicating that capital is flowing to fewer companies. In fact, to talk about that and more, I'm now joined by Neha Singh, the co-founder at Tracxn. Neha, thank you very much for taking the time out and speaking to us here on ET Now. Now, seeing the report, India's startup funding is stabilized at around $12 billion after the sharp correction from 2021. Has the ecosystem found its new normal?
Thanks a lot, firstly, for having me. In terms of the first half, if you see, of 2026, in terms of funding, slightly over $7 billion was invested, across the companies. And if you compare it to the first half of last year, this is actually up, up about 12%. But interestingly, if you actually see the deal volume is down by, more than 30%. So I think that is an interesting trend that, that has emerged, which is the overall dollar has increased, but it has gone through fewer number of startups. And this is actually something that you also see globally. So if you look at the total deal volumes, both in India as well as global, they are nearly at a 10-year low. But the deal value has been increasing, right? So I think it's also indicating to the fact that investors are probably putting their money behind a fewer number of startups.
Right, Neha. So even as funding rose 12% in the first half of 2026, the number of funding startups, they've fallen by 43%. So does this concentration of capital strengthen the ecosystem? How do you read this?
So there are a couple of, I would say, underlying trends which is there. So obviously, the number of startups getting funded, it provides a lesser number of funnel of companies which are going into the later stages, I would say. But still, having said that, if you look at it, there have been a lot of large rounds. And there are 1 or 2 criteria which is probably different than what it was, a few years back. One is the whole AI infrastructure spend, right? So you saw some of the large rounds happening in this space. And AI infrastructure being a very capital intensive space, also required some of these large rounds. So that was, probably one of the catalysts. I think the second thing which has also changed in the ecosystem, I would say, is that the quality of teams has become much more better than, I would say. So there are a lot more repeat founders which are starting up. or a lot more CXOs of large companies who are now leaving and starting up. So these are sort of more experienced team, I would say, than that was a few years back. And people are also fine with putting larger checks initially behind them.
Right, Neha. In fact, the report also shows a clear shift in investor preference from consumer internet to AI infrastructure. There's a focus on data centers as well, deep tech and clean energy. So what kind of AI startups are you seeing which are getting funded? And with that, do you think consumer startups have fallen out of favor for the foreseeable future?
So AI continues to be a big theme of investor interest, which is there. Apart from some of the applications which are getting funded, a whole big space is actually in the AI infrastructure space, right? It has also to do with a little bit of the fact of, all the nations also wanting to have their own sort of sovereign AI stack, right? You saw a lot of examples, for instance, like Anthropic's Claude Fable 5 being banned to be used outside US, right, because of security concerns. So a lot of the nations are sort of realizing that they also need to have a whole domestic stack, in the AI infrastructure layer. And hence that, continues to be like one big area of investments. And also, like H1 saw large rounds, in that space. So that continues to be, one area which will probably follow. The second is deep tech, and deep tech had been a very, I think the overall dollar invested used to be very small till a few years back, but that has changed, right? Thanks to the companies being hitting the commercialization, I would say, much faster. So you saw like the first company in the space tech space, becoming a unicorn in the first half, right? So I think that is something that you are seeing in a positive change. Obviously, consumer, used to be bulk of the, I would say, the investment percentage till a few years back. So that is reduced.
Right, Neha. In fact, when we talk about seed funding, well, in dollar terms, that has remained relatively stable. But the number of seed deals, well, they have almost halved. So is there caution in the air, even as startups, they continue to struggle when it comes to access to capital?
So there was an overarching theme that the number of seed startups or the number of investments actually reduced, and slightly more than the overall funding, I would say. So that just indicates that there's a lesser number of funnel of companies which are going into the later stage. But if you talk to investors, there were a lot of the overarching themes which was there, which sort of crowded their mind space, I would say, in the last couple of quarters. Because of which they were probably in the wait and watch phase for a lot of time. So one of them being the whole impact of AI, right? You saw, for instance, a lot of models being launched in the first half of this year, and a lot of the perceptions being actually changed. So, for instance, you would have like companies in a particular space, like a legal tech or an IT, and then you would have the large LLMs, like either it's ChatGPT or Anthropic launching a model. Or improving their LLM to cater to that industry. And the stocks, even in the public market, you saw stocks of the public companies getting impacted in those sectors, right? So that was, I think a new thing, and investors wanted to also sort of see how that unfolds and which are the companies which are going to get benefited out of it, and which are the companies which are going to be on the adverse side of it, right? Okay. So that was one. And the second thing was, the changes in tariffs, right? So obviously there were a lot of changes that had happened in tariffs, which impacted companies which were primarily in the export space, right? The US increasing the tariffs. So I think that was also changing, I would say, in the past couple of months. And then investors wanted to be, more in a wait and watch for some time to see how that unfolds and whether it impacts a particular companies positively or negatively.
Right, Neha. In fact, let's also talk about IPO activity, because that's steadily increased over the past 5 years. So has the valuation gap between private and public markets, has that narrowed? And then what are the trends in the IPO segment looking like?
So IPO market is probably one of the, like last year was a record year for the number of, I would say, tech companies getting listed, and as well as the VC-backed companies getting listed, right? And this year is also off to a decent start, though slightly slower, but actually off to a decent start. And then you also saw about 13 IPOs in the tech space, in the first 6 months. I think, if you talk like 3 years back, IPO was never aspirational for founders, for funded founders. That probably changed in the last few years, starting with the IPO of Zomato, probably, and then a lot more companies, right? And right now you have, founders which are even in the early stages, like when they are raising like a Series B and Series C, they're also talking about their IPO plans, right? So right now, I think it has become, there has been a change in mindset of founders of wanting to, also get listed in India, which used to be like never an option, even as even as close as like 3 years back. Right. So I think that is there. And obviously the IPO market is a little cyclical. So, having said that, there are windows wherein, you will have a lot of IPOs. There are windows wherein it's muted activity. So, companies will also have to sort of prepare and then keep it. So you'll probably, see some changes based on the overall public market activity. But having said that, there has been a complete change in shift in terms of the preferences of founders to getting listed.
Right. Neha, just one final question. Now, this report concludes that India's startup ecosystem is becoming smaller but healthier, with fewer capital flowing to fewer and stronger companies. In fact, looking ahead, what does the second half of this year to you look like?
Yeah, I think H2, should, like I would say 2026 overall should be better than 2025. And we are off to a good start. And there were probably a few things that will define, the next half. So one is the whole, AI, I would say, investment. So if you look at, India's overall share in terms of VC funding, it's about 8 to 9% on a global scale. But if you look at in the AI space, it is actually lesser. So it's about close to 3%. And people are expecting, more of companies to come out of India in this space. And hopefully the share of India in the AI funding space, also increases. Right? That is one. The second thing will probably be the IPO. There are a lot of good pipeline of companies which are looking to get listed, right, at various stages. So you'll probably see a lot more good issues, hitting the market, which are essentially VC-backed companies, right? And I would say just the third thing is that, the domestic capital is actually deepening in India, which you also see in the public markets, right? You also see sort of the mutual funds, the percentage of that share increasing despite the FIIs sort of pulling back. Similar to this trend that you also see in the private market ecosystem, so the participation of family offices, etc., that has increased. And, those pools of capital and the domestic funds investing, while there are the global hedge funds, for instance, like a Tiger Global or SoftBank, have been fairly quiet, right? Despite of the fact that, large rounds are still happening. So that is another trend that you'll probably see, that domestic, funds will probably have a higher percentage of overall funding this year.
Absolutely, Neha. So a lot of interest from family offices, and we do hope that this momentum continues in the second half of this year. The AI story and how that really pans out will be interesting to watch out for. But on that note, thank you very much for taking the time out and speaking to us here on Startup Central.